Welcome back. I'm Ted Thomas. This episode is all about how to buy tax deeds in Florida. So I've been at this for a number of years, over 25 years. We're going to talk about deeds now. What is a deed? Well, when the property taxes are not paid, the county is going to conduct a tax defaulted auction. That's going to create a tax deed. Tax deeds are actually sold for the back taxes plus whatever the fees are that the taxes are late. So that means you could buy a property for 10 cents, 20 cents, 30 cents on the dollar. I'm going to also cover the money-making business of tax lien certificates, which has also been around for 200 years. But I'm going to end this video with a point I don't want you to miss, and that's there's two big mistakes that are made at tax defaulted auctions. And if you make either one of those mistakes, you could lose $25,000 or even $50,000. I'm going to cover that as I finish this video. Now, I'll be right back. I'll see you there. How to buy tax deeds in Florida. Now, let me get started and give you some foundational information. The tax lien and deed business has been around for at least 200 years. I did not invent it. I just studied it for a long time, and now I've been working in the trenches for over 25 years, teaching people, guiding people, and doing it myself. All right, now the average person doesn't understand why we have tax lien certificates or tax deeds. We have them because people don't pay their taxes. All right, most property owners understand that they're required to pay property tax, and they pay them on time. But there's a certain percentage that don't pay the taxes on time. That means the county will have a shortfall. The county won't be able to pay the bills. Now, most people haven't thought about what bills the county has to pay. So let's think about that for a second. The police and sheriff are paid for by the county. Also, not only take care of the police and the sheriff, but they have lots of other bills. Who's going to take care of building the roads and fixing the road? Who's going to pay for the schools? Who's going to take the time to pay the school teachers? All these things have to be funded by local government. Now, if local government doesn't get all the money in, someone's going to be a shortfall. Are we going to lay off the police? Are we going to lay off the firefighters? No, we can't do that. So what the local government does is they either sell tax lien certificates in half the states, or the other half of the states, what they will do is they'll sell tax lien certificates. Today, this episode is about tax deeds. These are properties that the property owner did not pay the taxes. When they didn't pay the tax, the local government is going to take action. So the legislature authorizes the treasurer to do a number of things. Number one, to levy a tax. Number two, to collect the tax. If the treasurer cannot collect the tax, they will take action to seize and confiscate the property. In other words, they'll seize the property, kick the property owner out, and then they'll put the property back on the market. They don't want any more property. They've got enough parks and recreation areas. They don't want any more property. So they're going to put it back on the market, and they're going to start the bidding at a very low price, usually somewhere very close to back taxes and maybe the fees that the people were late. All right, so how do they go about all this? Well, in the state of Florida, for example, they have 67 counties. Okay, there's about 20 million people. All 67 counties will have tax defaulted auctions. So there will literally be hundreds of properties that are going to be sold at these auctions. Now, sometimes a place like Orlando will sell them every 10 days, and they will have 25 or 30 properties. Take a place like Miami-Dade, they might have 150 properties 2 or 3 times a year. A place like Hillsborough County, which is Tampa, they might have 100 properties at their auction. The point is, the local government is going to take action, and they're going to have a tax defaulted auction. They're going to sell those properties for the back taxes without a mortgage. They wipe out the mortgage, and they wipe out any liens on the property. Now, that doesn't mean they're going to take a mortgage and tear it up. That mortgage, whoever signed it, whoever the signatory was, they still owe that mortgage, but it's off the property. So when you buy a property, you're going to get a property without a mortgage. So my point is, the mortgage is wiped out. How do they do that? They call the process due process of law, and it's a matter of sending registered letters, and sometimes the sheriff even delivers the notice. What are the properties going to sell for? Well, they're going to sell for absolute pennies. For example, a $150,000 property might only have a 1% tax, so that'd be $1,500 for a year. So what if it was 2 or 3 years behind before they had the auction? So now it's behind $3,000 or $4,000. where you'd like to buy a property for $3,000 or $4,000 with no mortgage. This is happening every day. Now, those properties aren't going to get sold that cheap. People are going to pay 10 cents, 20 cents, 30 cents on the dollar. I've seen people pay 90 cents on the dollar. It's going to be up to you. The savvy buyers know what to do. That's what we do. We train people to buy them right so that they can sell them right. All right, how do you go to an auction? Anybody can go to an auction. There's no requirement to go to the auction. There is a requirement at the auction. If you bid, you need to have money. If you make any bid, you better make sure you can pay for it right there, because they're not going to allow you to do anything in that auction room unless you can pay for it. And if you bid and don't have the money, they'll have it. The treasurer will have a sheriff excommunicate you. And that's the wrong word, of course. The sheriff will move you out of the room. In other words, you'll make an exit on the arm of the sheriff, that's for sure. Now, I don't know where you are and where you live, but if you want us to give you more information on tax liens and deeds, tell us that in the chat box below. But meanwhile, I'll finish telling you about tax defaulted auctions and tax deeds. Now, the rural counties will have small auctions. Now, the small auctions are usually conducted by county employees. Now, sometimes that's on the courthouse steps, sometimes it's in the county treasurer's office. It's up to them. Those are the auctions I prefer to go to because they're not so competitive. Now, the big city auctions like Jacksonville and Tampa and West Palm Beach, they might have a professional auctioneer. Okay, I'm not negative on the professional, but here's what I am negative on. When the professional sells the property, they're trying to push the prices up. They're pushing prices up, plus whatever you pay at that auction, you'll now have to pay the professional auctioneer. And that could add 10, 11, 12% to the purchase price. That's a lot, 10 or 12%, when we're trying to buy properties at 20 and 30 cents on the dollar. All right, auction properties always go to the highest bidder. So the bidding is going to start basically at very close to the back taxes. There'll be no mortgage. All right, the highest bidder will get the property. Will some people bid way out of line? Yes. So you need to educate yourself and know exactly what you're doing. All right, who's the most important person in the government? I'll tell you right now. It's the treasurer. Not only do they control the money, but they will control the sale. The treasurer will probably be sitting in the room, and they can make any decision from removing you from the room to whether that property will be sold or not. So the treasurer has power, and they have the power to do a lot of changes, which I'll talk about on other videos. Now, this episode has been all about how to buy tax deeds in Florida. Buying tax deeds in all of the other states is much like Florida, but we need to go through various details. So if you want to go to big auctions, think about Broward County, think about West Palm Beach, think about Miami-Dade. If you want to go to smaller ones, look at the rural counties. The rural counties, the employees of the county are auctioning the property. They're interested in getting rid of property, not raising the price. I'm going to answer a couple of questions, and then we'll move on. The question is, how soon after the auction do you get the deed? Well, hopefully you get it quickly, but it's usually 30 to 60 days. It's only a small document for them to fill out, but they move at their speed, not your speed. So it might take 30 to 60 days before you actually get the deed to the property, which is an important question because you shouldn't go try to take possession of a property until you have the deed in your hand. You shouldn't do that. Here's another question about growth in states, high growth and low growth. So let me explain that. In Florida, it's a high growth state, a lot of activity. It's a very vibrant state. It's very benevolent for tax lien people, but it's very strong on confiscating property on the tax deeds. All right, so Florida is a good place for growth because a lot of activity. Places like New York, they have out movement in population. By that I mean they are losing people in the state. They lose round numbers, according to the census, about 200,000 people a year. So there'll be many abandoned properties in the state of New York because of the high tax, number one. And number two, the people aren't so optimistic. So I would say doing the high growth states, once you get experience, you might want to look at New York because by that time you'll know how to sell. And once you learn how to sell these, which is buy low and sell low, once you learn that process, which we'll teach, you'll like Florida. But you'll like Florida all the time, but you'll like New York when you really know how to buy and sell.